All right. I think everything is set up and we are ready to go. So, welcome to today's session. This session is titled The Successful Investor: How to Buy and Sell Stocks to Consistently Make 15% a year. Now, let's consider that an average, right? So we're consistently average. There might be years like 2008. I think everything is set up and we are ready. There might be years like 2008 where the market goes down, right? And it does nothing but go down. It's a financial crisis, or we have an extended COVID collapse, right? We're just going to try and outperform the market in those, and we're going to minimize losses. But on average, we're going to be targeting 15% a year, which is great because if you think about that, you'll be doubling your money, about every 5 years, right? So basically, some years will be better than others. Just understand that. But we're going to target an average of 15% a year. And one of the great things is this is going to be kind of low impact, low intensity, and kind of a prudent way to invest. So one of the things I forgot to say, Happy Father's Week, right? So this is you probably registered because you got an advertisement that this is our Father's Week bonanza, where we've got lots of education over the course of the week. So in the chat box, wherever you are, find your chat box and let me know if you're a father. If you're a father out there, give me in the chat. You can just type yes. You can just say, yes, I'm a father, by the way. So happy Father's Day, Frank, Barry, Richard, Shantha, Julian. I'm going to miss some. Paul, Craig, Sumit, Jason, Peter, Bim, Gary, Alp. Happy Father's Week to all of you. I see 3 kids, 9 grandkids, says Stephen. Terry says, I'm a mom and I didn't get a week. Terry, we will work on that for next year. So happy belated Mother's Day to you. How's that? All right, so welcome to, even if mothers out there, happy belated Mother's Day. And without you, fathers couldn't be fathers. So welcome to all of you. It's great to have you all here. This is our webinar title called The Successful Investor. I already mentioned that. So one big thing for today's session. One big thing about today's session, it's like a thing you really need to know. There's one thing I want you to understand. It's that until you know this, right? Until you know how to take control and make money in the market, you're going to be at the mercy of outside forces. Because what are interest rates right now? Right? Like zero. Yeah, so you can't even put your money into you can't save anymore. Right? That was the big thing. You save money, save. Now we're a society on spending, right? So you can't put your money into a bank account. You get nothing. You can't even get CDs or bonds. Right? You're going to get nothing there too. So basically, you're at the mercy of the stock market. You got to put your money into the stock market. So you got to know how to do that the right way, or you're going to be at the mercy of things like what the government says you get for your Social Security or for retirement. They tell you how much you get and when you get it. So you don't want that. So you got to be the one in control. All right. So my promise to you today is that you're going to see how you can safely, and there's a key word there, safely and steadily grow your portfolio every year without taking unnecessary risk. And you'll have confidence. That's one of the big things that people get out of this webinar and the education that VectorVest provides is confidence that you know when to buy and when to sell. All right, so that's my promise to you today. And one of the things that we're going to be covering, kind of the underlying theme, is a system. So I want you to understand that the system is what's going to determine your success. When to buy, what to buy, and when to sell are the key components of your system. All right, and that's why today's webinar, we've got those 3 big sections in today's webinar. All right, so if you want to put a face to a name or a name to a face, however you want to go, that's me. That's me. I don't usually wear a suit, but that's me wearing my suit. And I'm actually a part of a bigger team here. We've got a lot of people on today's webinar who you're seeing VectorVest for the first time. And in fact, in the chat box, I'm going to ask you to type in again. If this is one of your first experiences with VectorVest education, in the chat box, just give a yes. Like, oh, thank you. Muktaba says very first. So I'm seeing yes, first, yes. All right, so those of you who this is your first experience, number one, I hope it's a great experience. You'll have to let me know at the very end how your experience was. I did want to say this before we jump into today's session, is that I am just a part of a bigger team. VectorVest has been around for over 30 years, right? I believe 1988 is when it became incorporated. Dr. DeLito, the founder of VectorVest, actually created the formulas in the mid-70s for VectorVest. You can see our education team there. We've got a lot of people on this team, all here to help you become a better investor. All right, and throughout this week of our Father's Day, Father's Week Bonanza, we're going to teach you a bunch of different things. Hopefully this week is going to be a great experience for all of you. All right, so let's get back into today's session specifically. When a lot of people do come to us for the first time, a lot of times we hear certain things. For example, we'll hear things like, "Oh, my account's kind of going nowhere. I'm just kind of spinning my wheels. I'm going up, going down. I'm just kind of not really going anywhere. And I'm afraid I might not have enough money, especially because I'm getting towards retirement." And they say what they really want to do is just consistently grow things. They don't want to, make a lot of money one year and then lose a lot of money the next year. They just want to steadily grow. And one of the big things we hear is that they want to build confidence in themselves that they know what they're doing, and they're self-sufficient. They don't have to rely on other people, and they're able to provide for their children. So, like Father's Day, you want to provide for your children, grandchildren, all right? And so we want to help you with that, and I want to help you with that today. All right, so here's what we're going to look at today. I already hinted at what the agenda is going to be like today. So we're going to look at the exact criteria to pick the right stocks. That's part one. Number two is we're going to look at 3 keys to buy those stocks at the right time. Number 3, when to sell your stocks. All right, so we're going to look at that's the agenda for today. We did build the content of today's webinar also around case studies of people who have gone through the same training you're about to go through. So it's not just hypothetical. We didn't just run some back tests and cross our fingers and hope this works. Right, so some people that we're going to look at today who have gone through this training that you're about to go through, like Ross, he told us prior to learning the system that you're going to learn today, his trading was haphazard and time consuming, all right, and his results were below average. But in the 6 months after learning the system, he made 33%. And he said he was able to do that with very little trading. So we're going to look at that today. We're going to look at what Tim did. He said he felt like he was trading in the dark, but then, again, just very shortly after learning the system, actually 6 months, just like Ross, he was on target to do 30% that year. Kamel, who I believe his birthday is coming up, not that far away, but Kamel, he said, my trading was stupid and undisciplined. And then after learning the system in that first year, he was up 22%. And we'll take a look at Carol. Carol comes to our webinars all the time still. And she's learned the system and she's continued to increase her education. But I love what Carol said. She said, I was able to fire my money manager and I hired myself and now doing 8 times better. All right, so we're going to look at all that. So make sure you turn off all your distractions. You stay focused. Give your full attention. All right, it's going to be very interactive. Hopefully you've seen that so far today. I'll ask you a bunch of questions as we go. I'm going to show you stock charts, ask you questions, and get your opinion. All right, I'm going to give you everything I can in this hour that we've got today. And at the end, I'll show you how you can get more help if you do want to get to your investing to the levels that we're going to be talking about today. All right, so before we actually get into it, give me one big yes if you are ready, if you're as ready as I am. Man, we got a ton of people watching on YouTube. We got a ton of people here live on GoToWebinar. Thank you, Michelle, Toby, Julian. Awesome. So let's go. Section number 1. Let's talk about how to pick the right stocks. Right? Because just because the stock might be well known doesn't mean you should own it. Okay? Just because you know of a stock like Lowe's or Walmart or whatever doesn't mean you should own it. There's a right way and a wrong way to choose your stocks to buy. So let's take a look. And remember, we're going to be looking at one specific way to invest. There's a lot of different ways to invest. There's swing trading, day trading. We're going to do more of like a position trade, a prudent trade, one that doesn't require you to spend all day in front of the computer. All right, so that's what the focus of what we're going to be looking at today. So what you're looking at here, let's just say this is an example of a stock that you might think is good to buy, right? Because I know I zoomed in quite a bit, but it's going up. And then after you buy it, let's say you buy it here, what happens? Well, it either goes nowhere or it goes down, and you're left wondering, what just happened? You thought you did everything right, but it didn't work out. All right, so what's the problem causing this to happen? So we're going to look at some of these problems. Problem number one is you're buying stocks that are already going down. So what you're looking at right here, you see this? This is the same stock I just showed you just a moment ago. It's the same stock we just looked at, except what I did is I zoomed out. And I zoomed out a little bit, and you can see more data. I'm showing this because most investors have been trained to buy stocks that look like this. Because you might hear people on TV, or maybe you've had an advisor. And if this is true, in the chat box, let me know. Maybe you've had an advisor say, hey, look at this. We're going to get in here, and what we're going to do, we're going to buy low, and we're going to ride this thing all the way back up. Well, understand that stocks that are going down typically continue to fall. Right? A body in motion tends to stay in motion. All right, so problem number one is you're buying stocks that are already going down. So that's why they continue to go down. Problem number two is maybe you're just buying stocks because you see a good dividend. Right? You're not paying attention to anything else. And in fact, my co-coach, his name is Todd Schaefer. He's on the line with us today. He's in the background answering your questions in the chat. He and I coach people every week. We have a coaching session every Thursday. And we hear a lot of times in those coaching sessions, they'll ask us to look up a stock and take a look. And we'll hear things like, but it pays such a great dividend. I want you to understand that dividends they're good. Right? We're not saying dividends are bad. Dividends are good. What I want you to focus on here is that have a mindset of getting dividends is a nice little add-on bonus. Okay? So these are not something where we're going to buy and hold these stocks and cash in on dividends long term. If you happen to get a dividend, great. But don't focus on all your attention on dividends. Because if you're buying a stock just for the dividend, right, you could be setting yourself up for failure. Okay? So, take a look at right here. This is an example of that. This has got a dividend yield of 11%. All right? If you buy a stock just for the dividend and you let a stock drop, let's say 20, 30, 40, 50%, and I'm not just making those numbers up. We've talked to people who've held on to stocks. They had 50, 60, 70% losses in these things because they held on to these things, and they're like, but it pays a 3% yield. If you're going to write something down, you're going to say, if you keep making a trade-off where you're going to allow a stock to drop 30% to get a 3% yield, you're never going to outperform the market. Okay? For example, this stock right here had an 11% yield. It dropped 60%. All right? You're never going to outperform the market if you have that as part of your trading plan. All right? We'll talk more about how to do this right in just a second, but we're illustrating the problems right now. So problem number 3 is maybe you buy just because of the company name. A lot of people get into investing, and maybe you're in this position. Maybe you don't know everything. You feel you don't know everything, so what do? You buy the big names, the ones that are on TV. Well, hopefully you don't you're not out there buying things like, Bitcoin. You try to chase that. You're trying to get into on the GameStop mania. There's a lot of speculation there and a lot of risk. But the other thing people do is they buy big companies like the Walmarts, the Apples, the McDonald's. Some of them are good, some of them aren't. Some of them are good, but not right now. All right, this one that you're looking at here is Windstream. They actually were, when I moved into this house here in North Carolina, they were my phone and internet provider at the time. That's what a lot of people do. They're like, oh, that's a big company. Let me invest in that. All right, but we'll talk more about this in a little bit, but just understand that just because a company is well known doesn't mean it's the right stock for you to own right now. Okay? But let's talk about the real problem. The real problem is you don't have any buying criteria. When you have no buying criteria, you're left saying to yourself, well, what should I look for? What should I really be looking for? And if you don't know what to look for, you know what the market does? The market will give you a lot to look at. It's like, hey, look over here at PE. Oh, no. Look over here at sales. Look over here at cash flow. Look over here at the growth rate. Look over here at the volume. Look at the dividend. It's going to give you a lot to look at, and you're going to be blurry-eyed trying to figure out what to look at. All right? You'll get bombarded with information. You're always going to be left wondering if you picked the right one. Think about this as the pineapple problem. I went to the store with my wife, and she said, all right, I believe we were in Walmart. She said, go pick a pineapple. I went to get a pineapple. There's a big bin of pineapples. I pick up one. I'm like, I got a good one. I go to my wife. I got one. She's like, no, this isn't a good one. I'm like, what do you mean? I thought I picked the right one. You know what I didn't have? I didn't have the pineapple criteria. Apparently, you have to sniff the bottom or something like that, right? So I didn't have the right buying criteria. But do you see the problem? Without the right buying criteria, you think you got the right one. You're confident you picked the right one, but in reality, you didn't. Okay? And then you pick that stock, you think you did the right thing, and then what ends up happening? You end up holding on to that bad stock that you should never have bought because you didn't have the right buying criteria, and you end up holding on to it. It's a bad trade. You hold on to it too long, and you say things like, well, you know, I can't be wrong. I picked a good stock. It'll come back, right? You say, it'll come back because you were convinced you bought the right stock. But in reality, you didn't have the right buying criteria. So I want to give that to you right now. So let's go through 3 criteria that you should be using to pick your stocks. Right, 3 very simple criteria that if you just use these 3 things, you're going to be picking some really good stocks. And just by having good stocks in your portfolio, those good stocks all by themselves will cover up a lot of blemishes that you might have elsewhere in your investing. Right? Other things you might do that are not quite up to par. Right? So let's pick some really good stocks. So I like to draw it out as a little triangle first. So we'll draw this out, then we'll take a look at some examples. So the 3 criteria. We're going to look at some earnings. There's a couple of there's a couple of pieces dealing with earnings. Then we're going to look at safety. Safety is of high importance to us. And then we'll look at trend. So when it comes to earnings, we're going to be looking for 2 things. We want the earnings to be rising, right? So going up, right? But we also want it to be positive. And this is a key thing. I want you to start to be picky, because some people say, "Oh, all right, well, I'm gonna get this stock. Earnings are going up," and then you look closely and you actually see that it's just getting less negative. So I want you to be picky and actually, I want you to invest in companies that not only have rising earnings, but the earnings are getting more and more positive. Okay? Number 2, safety. When we look at safety, we're going to start by looking at a 1-year chart to get an overall feel of the stock's volatility. All right, is it in an uptrend? We'll talk about trend in a second. But we're going to look at a 1-year chart. But don't stop there. We teach our clients to start with a 1-year chart, then expand it out 3, 5 years. You can go longer than that if you want, but that's going to give you an overall feel of the volatility of the stock. All right. Can you in your gut, can you stand the ups and the downs of that stock? All right. And you're going to be able to see what its earnings have done over that longer period of time. Right? And we're also going to check here at VectorVest. We have a way to look on whether it's over or undervalued. We actually calculate the value. You could probably find that some other places. We love our calculation of value. in an ideal world, we would prefer to get into a stock where the price is under its value, because price and value always meet over time. Now, when it comes to trend, there's actually three things. The first thing, I was hinting at this a moment ago, we want the price trend to be smooth and steady. Okay? But we don't want it just to be smooth and steady going sideways. All right? That's more of like a conservative stock where you're just in it for the dividend. That's typically what you would find in those. We want it to be smooth and steady going up. And how do you find that? And we're going to look at some charts here in just a second, but we want it to be hitting higher highs, something like that. Smooth and steady going up. Not every stock is going to, well, no stock is going to go like this. All right, so there's going to be ups and downs. So we want this to be, the downs to be manageable, fairly smooth. We don't want it to be like this. Whoops, jagged. Okay? So let's take a look at this visually. This is, by the way, a lot of the charts I'm going to show you are 5-year charts, really just to save time, because we only have an hour together. We don't have time to look at a 1-year chart and then expand it out to 5 for all the examples. So this is about a 5-year chart, and it doesn't matter the time frame at the bottom. I would read books on investing, and they would show charts from early 1900s, right? So we're going to look at patterns, right? So if you find stocks, you want to look for patterns that look like this. So steadily rising prices, steadily rising price. So here is a 5-year chart. What you see in the past is most likely what you get in the future. Let's first start with this concept. Think like a 45-degree angle. All right, so if I don't have a protractor, but let's just kind of do something like that. So a 45-degree angle is what you will use to determine some volatility. If it kind of hugs that line, like this one does, it's kind of right around that line. It's giving you a feeling of, all right, well, this is steadily rising. There's not as much volatility. Because you want the stock to go higher over time. What you don't want is for it to go from bottom left to upper right and to be doing something like this. I mean, you wouldn't be able to sleep at night holding something that does that. Okay? So let's not do that. The other thing we're going to look at here, even though this is a 5-year chart, let's break it down. I'm not going to be exact here, but I'm going to eyeball it. All right. 1, 2, 3, 4, 5 sections. So 5 years. The other thing you're going to look at is, how does it do every year? Is it higher? All right. So here you've got, it's higher there, higher there, higher there, higher there, higher there. Again, we're not looking for it to buy and hold this thing for 5 years, but as an investor, you want to put probability on your side that if you get into this stock, that it has the likelihood to be higher in the future. And if this stock has historically gone higher, then that you're putting probability on your side that over time it will continue to move higher. Regardless of market direction is important. We will talk about that in a minute. Regardless of the market's direction, this example that you see here, this stock continued to fight higher over time. The other thing we want to do is steadily rising prices, but we also want rising earnings. Several of you shared with me earlier that this is your first experience with VectorVest here on this webinar today. If that's the case, you might not be using the same tool I use. This tool, we use a tool called VectorVest. That's our software. We're the VectorVest company. We have software as well. We calculate earnings. And I love our calculation of earnings because it's a 12-month forecasted earnings. Basically, the way that our founder describes it is it's like a flashlight into the future. What are earnings going to be 12 months from now? And it's in one number. You just have to look at this earnings to see if it is steadily climbing. You don't have to dig through earnings forecasts. You don't have to dig through all these reports on Yahoo Finance or that the company releases. You just have this one number. You want earnings to be going higher. And if you're going to write something down for earnings, write down earnings is the engine. Earnings is the engine. It's the engine for? Well, it's the engine to drive stock prices higher over time. If a company has falling earnings and they're losing money, most likely they're not going to be able to continue to grow their stock price. What causes investors to invest in a company? People see this company's doing well. They're making things that people want. They're growing. So we want earnings to be rising. So when you have these things working together, price and earnings, it really starts to build that confidence that you picked the right stock. All right. Remember earlier, we looked at Windstream. I use this example. I use it as an example, even though it was from years ago, because it, number one, was a real example from one of our coaching clients who came to us, but it illustrates so many points, all in one example. This gentleman who came to us, he came to one of our coaching sessions. You can see we've been coaching for many, many years. So Steve is his name. Steve came to us and he said, hey, what do you think about Windstream? I just bought it. And if you look down here, he said he bought it 2 days ago. And if you count back, 1, 2, and he bought it on the last up day. Have you ever been there where you buy a stock and it seems like you buy a stock on the very last day that it went up and it does nothing but go down after you buy it? Yes. Yes. Right? I think we've all been there. So that's what Steve's going through. He's like, hey, what do you think about this? I just bought it 2 days ago and this thing's falling already. So what Todd and I did in that coaching session, let's go back to that buying criteria. We're going to go back to that buying criteria. So we said, Steve, let's look at price. Price is in a downtrend. Earnings is falling. Price is also above its value, so it's overvalued. So we said to him, Steve, this meets none of the criteria. It meets none of the buying criteria. So you bought the wrong pineapple, right? So you got the wrong one. And so he typed into the chat box. He's like, all right, well, I'm selling it now. So, well, it's a good thing he did sell it. Now, of course, we can't tell him to sell it. It was his decision, but he said, I'm selling it now. It's a good thing he did was it dropped like 10% in the next couple of weeks. It ended up dropping about 62%. And then I checked it about a year or so ago that Windstream actually went bankrupt. And it was trading at like 20 cents when I pulled it up. All right, so imagine if you didn't sell it. And has this ever happened to you where you get this hope? It's coming back. And then it falls. Oh, it's coming back. Now's the time. And then it falls again. And then you end up holding this stock for years sometimes. All right, I'm going to ask another quick question in the chat box. Let me know, if you were to look at your portfolio right now, what's the biggest negative number that you see in a stock? How long did you hold on to? Oh dear. Sherilyn says negative 98%. Percentage-wise, that you stare at every day. Hey, Brian, not bad. You only negative 9%. That's good. Ross says, I made all those mistakes. I'm holding a stock that's negative 76, negative 38. Yeah, so if you look at these things, we'll talk about when to sell in this webinar a little bit later on. I want you to understand that a lot of that could be prevented if you use the right buying criteria. All right, so if you knew which pineapple to pick up front. So let's do some preventative measures here. Because I put a few examples from, we track a paper portfolio with our clients just to illustrate the techniques. So when you follow the checklist, you could do things like this. This is a stock that we traded actually earlier this year. Actually, we sold it in January. So this is just one of the examples. And I don't want you to get hung up on the ticker symbol so much, more so the pattern. You see how this stock, this is the COVID drop. So pretty much every stock out there had a pullback like this. But when we got into it, which was over here, it had resumed a smooth and steady upwards pattern. Earnings began to rise again, positive. So this was a 25% gain in a few months. So remember, we're not buying and holding here. We're not day traders either. This is what, 3 months, 2 months? So 25% in 2 months. That's typical of what we're going to see. We're going to be in trades typically weeks to months. Here's another stock. Again, don't get hung up on the ticker symbol. Look at the pattern. Smooth up. Even the downtrend was smooth. It didn't drop off the face of the earth. Now, here it dropped quickly, but we had our rules in place, which we'll talk about later, allowed us to lock in a 15% gain. And then here's one. You will find stocks that actually you've heard of before, like Lowe's. Hard to get any smoother than that. This one was a 23% gain in a few months. One of the points I want to get across here is that there's tons of stocks out there that meet the criteria. It's not something where you're going to have to find a needle in a haystack. There's tons of stocks out there that meet this criteria. All right, now that you know what to look for, they're really going to start to stand out. So I want to actually prove it to you that you can very quickly find stocks that meet this pattern. So I'm going to show you some graphs. I think I got about 5 graphs to show you. I'm going to show you, they're 5-year graphs. Again, just to save some time. And on a piece of paper, just have your pen out and just do like a yes, no, and a maybe column. All right, yes, no, maybe. And if you see one that's a definite yes, put it over there. If you see one that's a definite no, put it there. If you see one that's like, maybe, put it there. All right, remember, we're not deciding to buy it today. We're just trying to give it an overall gut feel based on the criteria that we looked at, whether they're yes, no's, or maybes. I want to start with an easy one. In the chat box, let me know. Yes, no, maybe. All right, so you will see things like that. I see everybody's typing no in the chat box. No, 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 no. Yeah, perfect. When you see something like this, you just move on, right? That's example 1. Example 2. Example 2. Remember, this is a 5-year chart. So what you're looking at here, this is about 1.5 years. 1.5 years. All right, so this one, see some people say maybes, but most people are saying no. All right, this one with earnings going higher, I can see why some of you are getting hung up on that. But if you're in a 1.5 year downtrend, we're going to skip. You want to know why? Because you're going to find stocks that look like. What do you think about that one? See how everybody in the chat box sees this and they're like, yes, this is something that I want to put in my shopping list. Right? I want to put it in my shopping list. Something, and remember, we're not deciding to buy it today. There's some things we'll talk about later to buy it today. We like the price trend. We like the earnings info. All right. So yes. How about number 4? All right, so no, I see a lot of no's. It was good, right? It was good, but then fell, and it just can't recover here. And earnings is starting to fall, so that'd be a no. How about number 5? See, you see how quickly my chat box is getting filled with yeses. You can visually spot beauty. Right? You look at a painting, you have a gut feel of, oh wow, that looks good, or wow, that doesn't look good. This is the same type of thing. You can see this. One of the things I want you to start doing is, if you have a list of yes, no's, and maybes, as you go through a list of stocks, anything that is in the maybe category, change the maybe category to no. Only start buying stocks that you feel really good about. You want to know why? Because you're going to eventually sell that stock. It'll either be a stock that you made money on or a stock you lose money on. You will not make money on every trade. On the stocks that you lose money on, you need to be able to look back and say, you know what? When I bought the stock, I made the right decision to buy it. It just didn't work out. You don't want to look back and say, oh, well, I never should have bought it to begin with. All right, so you got to feel confident in these things. All right, so would you be more or less confident using a system like that when you have a buying criteria? Would you feel a little bit more or less confident? So in the chat box, you could type more or less. Keep it. So I'm seeing a tons of mores coming through here. Yeah, definitely more. This is important. You need to listen to this. A big part of being a successful investor is your confidence. And your confidence comes from a system that you believe in because you know it works. All right, that's where Ross was. Remember Ross from earlier? He sent me an email recently telling me about his journey to become a successful investor. He said he was experienced, and I bet a lot of you here have many years under your belt on investing. But he had no system, and he spent a lot of money on things like newsletters, and he said he was prone to over trading. He never committed to a strategy, and his results were average to below average. Ross was determined to turn things around, so he took some training like you're going through today. He eventually built a diverse portfolio. He focused on safety and earnings like we were talking about here today, and 6 months after learning what you're learning today, 33% gain. All right, now, and here's another cool thing. He's only spending 15 to 30 minutes a night, and he's more confident and relaxed. All right, so shift number one. We spent a lot of time on this first section because I feel it was that important. We would need to make a strategic shift. Being uncertain about your picks, not knowing if you picked the right pineapple, or buying a pineapple thinking you picked the right one, to where you have the right buying criteria, and the ones that you pick are high probability stocks. All right, so this is one part of your system. The way you pick your stocks is one part of your system, and it's needed to help you average 15% per year or more. All right, so let's move on to step 2. How to buy at the right time. Because now that you know what stocks you want to buy, you've got to know how to buy them at the right time. Most people have been taught the philosophy of, well, buy anytime. Buy anytime. But that turns into buy and hope. Right? Instead, you can buy at the right time and steadily grow your portfolio using these types of strategies that we're going to look at. Here's an example of the market. And actually, what you see here, this repeats itself every so often, where you have an uptrend in the market and the market comes down. The market goes back up, the market comes down. The market goes up, the market comes down. And what are we experiencing now? It's kind of trickling up and down. This chart ended here October 2020. For the last 5 months, we've really been just trying to slowly moving higher, but with some ups and downs in there. That's what's been tough recently for a lot of people, especially since January, is the market's been up and down. It seems like every time you get in, then the market reverses. And it sometimes feels like a roller coaster ride. And if you know what a roller coaster ride is, the amusement parks haven't been open for a little bit. They just started opening back up. Maybe you don't go on roller coasters anymore, but you might remember, what's it like? Click, 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 climbing up, and then what is it like on the way down? Boom, right? It feels like a roller coaster ride. Right, so we don't want that to be our portfolio, and it's especially not good if your roller coaster ride begins up here with your portfolio and all you experience is the downdraft right out of the gate. You're also sometimes left second guessing yourself. Should I get in? Should I not get in? Okay, so what's the problem here? What's the problem? Again, this is another way to look at what's the problem causing stocks that you buy to drop. Well, we already talked about this part. I'm not going to go through it all over again. Maybe you picked the wrong stock, right? You picked the wrong pineapple. So we already talked about this part. But that, again, I just want to remind you that could be a problem. Problem number 2 is you might just be getting bad advice because maybe you weren't confident in your own ability. So what'd you do? You flipped on the TV or you went to an advisor. And again, if you're an advisor out there, I'm not saying advisors are bad. I am totally not saying that. I am not saying advisors are bad. I bet most of them have the best intentions. They want to help you. But a lot of advisors are following the same philosophy that they've been taught, which is, all right, let's buy anytime. It's always a good time to buy. Let's buy and hold. And they're ultra conservative too. They just want to get the 1, 2, 3% sometimes. But wherever you got your advice, most of the people teach it's always a good time to get into the market. We'll talk about why that is not the best case in just a second. Problem number 3 is maybe you feel you're cursed with bad luck. Like you say, oh, well, I got this little devil sitting on my shoulder. Every time I buy, the market goes down. I'm not one believing that there's bad luck. There's some people cursed with bad luck. But there is some truth to this. If you feel you've got bad luck, you will cause bad things to happen to yourself. You're the problem. Because what do you end up doing? You buy a stock, and just like Steve, 2 days later it starts to go down. You start to say, oh, here we go again. And then you sell it right away. And then what happens after you sell it? It goes back up. And you say, oh, man, here we go again. Every time I sell a stock, it goes back up. But if you actually used a system and used the right rules, you would never have sold it to begin with. So you could be the reason that you're losing money because you think you're cursed with bad luck. But the real problem isn't those 3 things individually. It's just bad timing a lot of times. Timing is one of the biggest things causing your success or failure. Timing. What you need is a clear signal saying, now's a good time to get in. If you get in at a good time, even if you're not the best stock picker in the world, if you get in when the market's going up, it'll help even your bad stock picks. So again, let's look at 3 things. We're going to look at 3 keys to buy at the right time. Number 1 is the biggest one. Put a double star next to this one. The market. The market must be in an uptrend. It's the biggest one because if you do this wrong, there's bigger consequences than if you just buy a stock that one individual stock might be in a downtrend. If you buy when the overall market is falling, it affects the entire portfolio. I use this as an example to highlight kind of the worst case scenario that not only people suffered back in 2008, but we had a bunch of people who actually suffered through this in 2020. So let me take a look here. Robert, he said he retired in 2005. He had a professional advisor at that time helping him out. Then when the financial crisis hit, he was told to ride it out. What does that mean, to ride it out? It means they're going to continue to buy and sell things as the market was falling, and he ended up losing 40% of his retirement, and he thought his retirement plans were in ruins. So if we look at the overall market, here in VectorVest, we have what we call a market timing graph, where it doesn't just look at the Dow or the S&P. This actually looks at all the stocks that we track, thousands of them, and it puts them all together in an index, so it gets a better feel of what the overall market is doing. So this is about a 20-year look at the market, and this was that 2008 period that we were just looking at with Robert. The point I'm trying to get across here is it doesn't have to be a financial crisis for you to lose money. Right? This with Robert, yes. 40% dropped very quickly. But some people don't pay attention to the overall market, and they'll just buy any time. They could be buying here. They could be buying here, here. What you want to do is pay attention to what the market is doing. And if it is falling, you wait for it to stop falling. So if I get my pen back out, there are bigger trends in the market. So this is multi-years. This is multiple years. This is about a year and a half. All right, so they're bigger trends, and then within each of those trends, there's some smaller trends. What you need to start doing is, number 1, don't try to nail the bottom. All right, so if I take this off, don't try to nail the bottom, because people, I remember in 2008 especially, and even in 2020, they're saying, oh, I'm going to get in now. The market's dropped so much, and they buy here. Or they buy here. Wait for the market to finish falling And how do you know when it has stopped falling? When it starts to go back up. That's our philosophy, is buy when the market is rising. So we're not going to try and nail this bottom. What we're going to do is wait for it to go back up, and I'll show you the signal, one of the signals you should start using in just a second, and just buy as it's going up. Eventually, the market will stop going up, and you know what you're going to do? You'll stop buying. So let's just say you were buying up through here, and when the market starts curling over, you've stopped buying. So that means that when something gets sold, you're not replacing it. It starts to go down, and as it gets sold, you don't buy a replacement, and then as the market continues to go down, you become more and more in cash. And that's why during this market drop here, during the COVID drop, most of our clients' max drawdown was 10%. All right, so here's a closer look at the market, and I included that COVID drop. And the signal that we use, we call it the green light buyer signal. And I don't have time today to get into all the rules, but basically a green light is signaled basically when the market is higher than it was a week ago. Let's just use that as the basis. And it triggers a little green arrow. It's better than using moving averages on the S&P because that doesn't give you a daily signal on whether today is better than yesterday. So notice what you see here. When the market's going up, that's when you get the green lights. You get the last green light about here. And then what do you see during this big drop? No green lights. You see the green lights when the market's going up. Now, when the market's going down here, occasionally you might get a little random green light. But what you don't get is a lot of green lights. Same thing here. You might get one green light during this drop. And then you start to get the green lights again as the market goes up. So we want to be paying attention to the market and only buy when the market's going higher. All right, so that's the big one, the market. Number two, on a smaller scale, you want the stock to be in an uptrend. All right, so you want the market to be in an uptrend. Same rules apply for the stock. You want the stock to also be going higher. We talked a little bit about this earlier. Smooth and steady rising prices. Back then when we talked about it, we were looking kind of at a helicopter view of a 1 and 5 year chart. But now we're going to get a little bit closer. We're going to not only look at the 1 and 5 year look, we're going to start to look at, all right, well, what is it doing right now? So earlier we looked at Windstream. Let's talk about what was going on with Windstream. If we take a look at that longer look, when Steve came to us, we said, you know what, Steve, it's in a downtrend. It's hitting lower highs and lower lows. And it was actually bouncing off. It was hitting a trend line. I said, Steve, that's not the best time to buy is when it's at a trend line. We at least would want it to break above that. That was in addition to what we talked to him about the buying criteria. So you don't want a stock to be in a downtrend. Right? So you want to flip it around. You want the stock to be in an uptrend. And that means hitting higher highs, higher lows with rising earnings, of course. That's important because you can clearly see when it stops doing that. When it starts to hit a lower high and a lower low and say, all right, well, that's not a good time to buy. I want to wait for those lower highs and lower lows to end and then start to pick up a higher high. That's when we're being more prudent about things. All right. And then number 3, you're not going to get this on like every chart pattern that you look at, but we want to look for stocks that are clear of resistance. You'll probably see a lot of this now because the market has been almost channeling for the last few months. It's going up and down. Just recently, it's like testing highs. We just had an all-time high this past Friday in our market timing graph. So there could be stocks at resistance or near resistance right now. So we want to have stocks that are clear of resistance. And if you're not familiar with what resistance is, basically think of it as a ceiling. And it makes more sense if we look at it on a stock chart. You see how this stock was going up? It hit a high, came down, came up, hit it again, came down, came near it. So think of this as a ceiling. Every time you hit your head on the ceiling, you probably fall down. That's what stocks do a lot of times. So what some people would have seen here, and the mistake people make, is they see this good stock that was rising, and they just buy it any old time, They buy it here when it's near resistance. And what happens a lot of times? It hits resistance and it falls. A more prudent way to do it is wait for it to break above resistance, a clear candle above. Here's an example. Here's MSCI. It had nice price action coming in. It pulled back. All right. Well, here at VectorVest, we actually plot support and resistance to make it pretty simple. So we show you where resistance is. And now if you look over here, you got a candle starting to poke its head above. So that'd be a little bit more aggressive because that candle is still straddling resistance. And you notice what happened. It tested it for the next week or so. It tested out that resistance. But then it bounced up. And now you got a full candle above resistance. And a lot of times what you'll see happen is this. Off to the races. Clear sailing. So that's a more prudent way to do it is if it's near resistance, wait. Wait for it to poke its little head out of the gopher hole above resistance. So those are 3 key things. What percentage of the time have you made sure to look at all 3? Just give me a quick number. And you don't have to be 100% accurate here. Do you look at for all 3 things on 100% of your trades? Half of them? None of your trades? Do you look at all 3? So I see 0, 50, 80, 45, 100, none, 80, 50. So the thing is, if it's not 100, a couple of you said 100, fabulous. Manoshare, you've been with us a while, perfect. Mura, you've been with us a long time, 100, excellent. If you're not at those levels, if you're not at 100, you just got a little work to do. You should be looking for those things on every single one of them. You got to get it up to 100, and that's where Kamel was. Kamel basically, he did the trifecta of bad things. He bought falling stocks in down markets on down days. Like, you can't get any worse than that. And he admitted that. I'm not making fun of Kamel. He actually said, hey, I did the trifecta of bad stuff. And then after he got into these trades, he would hope that they would come back. And he hoped that they would come back. And he started to question his ability to continue investing. And hopefully you're not there right now. I think you're at this webinar because you haven't yet decided that you want to quit investing. I really hope you never get to that level. But that's where Kamel was until he learned how to do it right. Once he learned what you're learning today, he had a couple of portfolios up 22%. I believe the 43% was more of his retirement portfolio. But some of the keys, no stupid actions. It's less stressful, more rewarding. And he actually, I love it. He would have his cell phone and take pictures of his computer screen. And this, you can see this is a picture of his computer monitor where he showed he was up 22%. This one was more of his worry-free retirement portfolio, up 43%. And you can see here, this shows you the number of winners and losers. And you can see, if you highlight right here, he only had 52% winners. So you don't have to have 100% winners to make money. Right? And that's about where you'll probably be, about 50% winners. And the key thing is, in the next section, we'll talk about how to manage the losses. So you got to make another shift. Go from a portfolio roller coaster to where you're using buying criteria in addition to market and timing signals to know when to buy. That's how you're going to start to see some steady climb in your portfolio. All right, so you got to make that shift to be like, I'm going to go from buying anytime to where I'm going to start using some buying criteria. All right, number 3. Ready for when to sell? I talked a little bit too long today. Hopefully you didn't mind. I think I went a little long in today's webinar. I tend to get excited about this. So I'm going to try and still give you all the juicy content here. So let's number 3, how to know when to sell. You can know the right stock to buy. You can know the right time to buy it. But if you don't know when to sell it, you could be in a little bit of trouble. Because as you said earlier, you could be holding on to these stocks for too long. Here's an example. You find this stock that's going higher. You say, oh, but Brian, it's right at resistance. I'm going to wait. And you wait. And it breaks a full candle above resistance. And you get in. And you have a winner. But then you don't know when to sell it. And you watch that winner turn into a loser. All right? And you start to suffer big losses because you don't know when to sell, and you're saying things like, I might as well hold on to it now. There's somebody earlier, so they were holding a stock that was down negative 98%. You don't want to be in that position where you're saying, well, I might as well hold it now. All right? Because if you're in that position, it's really hard to recover losses. And worse yet, that was the financial side, but worse yet is the emotional side. You start to feel like a failure. Those of us husbands out there, we're talking Father's Day here. This is our Father's Day training. A lot of you out there are fathers and husbands. It really stinks when you don't want your wife to ask you how the portfolio is, because then you either in a position where you're going to have to lie or admit that you're a failure at investing the money. So let's not have that happen. The way that we're going to make sure that that doesn't happen is you got to know your exits. We've got there's a bunch of things that we teach, and we have a more expanded course that we teach called The Successful Investor. I'm going to boil it down to two big main things today. Number one is setting your line in the sand. And number two, never give back more than half your gains. Those are two big ones. So we're going to look at those today. If we had more time, we actually spend about an hour and a half just on this topic. But let's talk about these two things here. So let's look at a couple of trades that we had done. Whatever. Here's UVE. Good looking chart, right? We were excited about this one. It was channeling, and then we got a full candle above resistance. We're feeling really good about it. So it looked good, right? We were pretty excited about it. So we're planning out the trade. We said, all right, here's going to be our entry. And we say, all right, we got to draw our line in the sand. And a line in the sand is when you're going to exit your trade. We use a VectorVest stop price, which is calculated based on a 13-week moving average, because we like to give stocks enough room to breathe. So we drew our line in the sand down here. That's our entry. Then what happened? About a month later, the stock and the market turned around on us, and we had to exit the trade. It did go up for about 2 or 3 days, and we're starting to feel really good. But then it turned around. Eventually, we had to exit here. During the day, it hit our line in the sand, and boom, sold. Right? So if you look here, that trade was about a 10% loss. And that's typical what we're going to see. We're going to see between a 10 and maybe a 20% loss based on where the VectorVest stop is. Having a line in the sand will protect you from suffering large losses. A lot of people would say, oh, but it was such a good stock. It was just that was a rant. It was a gap down. Give it some time, Brian. See, Brian, you were wrong. Look, it bounced off of that. But then it dropped. And then you're left holding this good stock saying, I hope it comes back. You got to have that line in the sand where you say enough is enough. We use the VectorVest stop price. Don't set your line in the sand so tight that you're just going to get out of these trades very quickly. Give these good stocks enough room to breathe. We use a VectorVest stop, which is based on a 13-week moving average, but we have a proprietary formula here at VectorVest which adjusts it for the company's fundamentals. The second key point is you don't want to give back more than half your gains. And here's an example. I'm going to go through this example quickly here. We entered this trade here. It shot up, and then it pulled back. We call it the give back half rule. If we're up more than 10% on a trade, we walk away from it if it pulls back to like a 5% gain. This one was up. If we sold it at a 17% gain, we were probably up about 34, 35% up here. And then in a couple of days, it pulled back very quickly. So it went from 34 down to 17 and immediately got sold. So people would look at that and be like, oh, well, why'd you sell it? It came back. Well, we eventually got back in over here. We bought in here and ran up. You see, we sold it at oops, I just I'm very sloppy with my writing, about a 9% gain, which means it was probably up about 18% up here. And then in one day, it had a big pullback, and we sold it at about a 9% gain. Again, people would say, well, why'd you sell it? Well, because those are our rules. And this sometimes happens. Knowing when to sell allows you to lock in gains and minimize losses. You got to follow rules. You could always get back in, lock in those gains following the give back half rule. If it decided to go back up, we could have always reevaluated and got back in if the market said it was time to get back in. All right, but don't sit there and say, oh, well, last time it would decide to go back up. This time I'm not going to sell it. All right, so that's where Tim was. He was a buy and hold investor. He would hold as long as he could, but he never knew when to sell, and he held too long and stocks went down. And he waited too long and the stocks never came back. All right, but now he's following rules that you're learning today. He was on pace to make 30% that year. He's making informed decisions, and here's a cool thing. He's only setting his stops once a week. That's one of the things you could do if you wanted to when you're doing a more prudent technique. It allows you to sleep a lot better. So let me ask you this. In the chat box, if you were to look at your stocks right now, do you know when you would sell those stocks? Every stock in your portfolio, do you know what would happen that would cause you to sell it? Every single one. I'm impressed. There's a bunch of people who said yes to that. I'd say it's about 50-50 in my chat box that I'm looking at. Yeses versus nos. If you're a no, well, there's two things. If you have a no, you got to fix that. You got to set your line in the sand. That's your first thing you got to do. The second thing is, which we didn't have time to cover today, you got to know whether the stop that you have set is the right stop for your stock. We didn't have time to get into that today. So shift number 3 is not knowing when to sell, but you got to know your exits. All right, this is critical. To be a successful investor, your system must include rules detailing when to sell for profits and to lock in profits. I should say to lock in profits at certain points and to minimize losses. That's how you're going to be able to average 15% per year or more. And your system determines your success. Here's a quick checklist I'm going to give you. It's like a quiz. Are you ready to take a quiz? Quiz question number 1. Does your market signal right now that you use to tell you when to buy, does it reliably tell you the market is in an uptrend? So give yourself a yes or a no. So grade yourself there. I see a bunch of yeses. Awesome. A lot of people who are here actually use VectorVest. I would hope your answer to that is yes. Number 2, are you currently finding safe stocks that are rising in price with rising earnings based on the criteria that we looked at today? So give yourself a yes or a no there. Here's another thing. There's somebody typed in the chat. Chris typed in the chat box. Yes-ish. Number 3, how long does it take you to do it? And the answer to that could be, you don't have to give me the minutes and seconds. It could be too long, not that long. All right, so if the answer is it's taking me more time than I want, then we got to find ways to shrink that down. Do you know how to use stop prices? And lastly, are your stops helping you? All right, so you could be using stop prices. Are your stop prices helping you protect profits and minimize losses? So based on those questions, what did you just learn about your system? What did you just learn? Give me a gut feel. Like, is it a complete system? 100% complete system? Is it an incomplete system? Eugenia says, it's iffy. Edward says, it's okay. Gary says, it works. I got some holes to plug, says Nelson. Eric says, it's tragic. John just said, hey, my system could be improved. Yeah. So one thing, the big shift a lot of people need to make is going from no system to using a system. So you got to say, all right, well, I don't have a system. I need to use a system. And that was one of the big things that Rick did. He said he went from feeling helpless and hopeless to where he's now in control and confident. And that's mainly because he went to using a system. He didn't know what to buy, or when to sell. That if you're in that spot, that means you have no system. All right, because he was hoping and he felt like he had no control. Rick started using a system. He says, now I know how to find the stocks. I know what to look for. I know when to sell them. And a month into learning the system, the market was in his favor. He knew how to react. He pounced like a puma, right? 11.5% in his first month because he knew a system to do. He has confidence and he feels in control. All right? As you've seen, without the right system, you might be buying stocks only to see them drop right away. You might be like Tim, feeling like you're trading in the dark. You don't know which stocks are good, when to buy them, and especially when to sell them. And maybe you're spinning your wheels with your portfolio. You feel like your portfolio is going nowhere. All right, maybe you're not growing it as fast as you really want to. Today, we outlined the basics of a system that you can use. And when you have that system working for you, you'll know exactly when is the right time to buy, what stocks you'll buy, and when to sell them. All right, so that way you can start to feel confident in yourself and you have the ability to be self-sufficient. So the obvious question right now is, all right, what do I do next? And what is the best way to install the best system possible for this? Well, the way I see it is you have a choice to make. Like choice number one, this is option number one, is you try to do it on your own, learn by trial and error, and you might be in the same spot this time next year, not getting the results that you want, financially or emotionally. Option number two is you 100% commit to learning the system to become a successful, confident investor this year and begin to consistently grow your account. All right, so if you're in option two, if that's what you want to do, I said at the very beginning, I tell you the best course of action. And I really feel the best course of action is to take the full course that we have called The Successful Investor. I mentioned it a couple of times in today's webinar. It is the full system that we put together. Hopefully you feel I give you a ton of content in the hour that we've spent together. All right. This course is something that we put together to take you step by step through the system that you need to safely and steadily grow your portfolio. We dive deep on every single topic that we went over today. Now you'll have a complete A to Z system showing you how to grow your account consistently. I do want to say this. Before we get to that, I want to say one thing. It's only for people who are dedicated, who take their investing seriously, who are willing to put the time in to learn the system. So if you're not serious, if you're not committed, if you're looking for some sort of magic pill to buy some crypto stock tomorrow and become a millionaire in a week, it's not the system for you. And we wouldn't want you in with everybody else who does take it seriously and who is committed. All right, we respect your time and your money, and hopefully we only want people in there who respect their own money. All right. So by learning the system, you're going to have that complete A to Z step-by-step system. You're going to have those results. The easiest way to explain it, let me just map it out for you quickly. I want to give you a full understanding of what we do in the course, which is different than what we just did in this 1 hour long webinar. We break it into 6 modules. Each module is about an hour long. All right. Module number 1 is we build a strong foundation. You get a strategic game plan. Now, you got to begin with the end in mind. So you're going to get clear goals, clear objectives. You're going to know what kind of investor you've been and how to course correct to get on the right path. Module 2 is the beginning of the system itself, the when to buy. We talked a lot about the when to buy today, but we're going to go into more detail in Module 2. All right? You're going to be able to understand and recognize what the market's doing at any point in time. So what we talked about today on the when to buy, we looked at just green lights, right? We were we kind of broke it down into the one signal, but it's a little bit more than that. You got to know whether the market is bottoming, blasting off, trending, topping, downtrending. But you got to know what the market is doing at any point in time and how to recognize that. Once you know that, you got to know what to buy. All right, instead of digging through the haystack, trying to figure out where the needle is, we're going to show you, hey, this is exactly what you should look for. There's a ton of needles out there. And they're not even in a haystack. They're just piled up. Just go look for them. When to sell. Knowing when to sell is important because selling too early or too late can be very demoralizing and financially devastating sometimes. So we're going to show you what to do if a stock goes for you, what to do if a stock goes against you. Module 5, it's all about trade setup. How many shares to buy, how many stocks to buy, how to diversify, all the fives. All the fives are in Module 5. How about that? Module 5, all the fives, all the fives. All right, so that the outcome is you're going to know exactly how to set up your trades and your portfolio. Whoops. I skipped ahead. I hit the wrong button. You get to see all the other slides. Where was it? There we go. Module 6 was the implementation formula. That's one of the things that doesn't get covered in a lot of courses, is actually how to get into the broker and place the trades. All right. It is 100% money back guaranteed. You can actually go through the whole course. And if you don't like it, after taking the whole thing, you can milk us for all it's worth and then say, you know what, I want my money back. Hopefully you won't do that because you'll be super satisfied with what you've learned. But we do offer a complete money back guarantee. All right. We have a couple of bonuses. How to protect and profit in down markets. A lot of people feel the market is toppy right now. A lot of our indicators are getting up there. So we're going to show you 4 signs to know when you really should become defensive, 2 ways to ensure your positions, 3 ways to even profit in down markets. That's one of the bonus modules you get. We're also going to show you how to automate your trading plan. Right? This is one thing that Kamel did. If you remember Kamel earlier, he learned the system, and now he has set up his portfolios on virtual autopilot. He still actually has to place the trades, but he is getting alerted. He has set that up, so now he's even more on hands off, let's say. A lot of you are brand new to VectorVest. We're going to give you 60 days of access to VectorVest if you don't already have it, so that's another bonus. We have a plug-in module called the Robo Trader. It's one of our top-end tools. You're going to get 60 days of access to that if you don't already have that now. This is one of our favorite parts. You're going to get 6 live sessions with us. So we're not just going to give you a course and say, hey, good luck. Todd and I are going to be there with you every single week. And we're going to be there with you every single week. Now, this is a Father's Day special that we've got here. So you're going to get the next couple of weeks to go through the course. Todd and I will start meeting with you live probably a few weeks from now. I was going to say a few months from now. A few weeks from now. So you have a few weeks to go through everything, jot down your questions, and then when we start meeting with you live, you have 6 weeks with us in live sessions. All right? We'll be there with you live every single, typically Wednesdays. All right? You'll be able to see that paper portfolio that we track. You'll be able to see us implementing the system. All right? You'll be able to see the stocks that we get into and get out of on a weekly basis. So the total value is over $1,900. You get all these cool things, right? What does it cost? Some of these courses out there cost over $2,000, over $1,000, $495. But we want you to be able to enroll today and start getting results right away. So is it worth those prices? Definitely, because the changes are immense that people see in their trading. The regular price, we sell this course year-round at $495. Like if you go to our VectorVest University, you'll see it at $495 pretty much throughout the year. When we have special events, you'll even see us drop it down to $295. But while we're live here on this webinar, right, while we're live, if you order before the end of the webinar, instead of the $295, you can get it for an additional $50 off, which is $245. All right, we're going to put a link into the chat box, vectorvest.com/TSIC. If you just click on that link or you type that link into your browser, it'll bring you to a page where you'll see that discount. It's $245. It is well worth the money. Todd and I are going to make sure that you are on the right path. And we get tons of comments about this. John, we asked these people who have taken the course, some of our students, we said, what would you tell other people thinking about the course? John said it'll help you make better trades, reduce your losses, and earn more profits with less time. Lucine says, just do it. The benefits are unbelievable on so many levels, financially, emotionally, and psychologically. Richie says, I've taken several other investment courses, and this one is among the easiest to implement and stay on track. All right. Then we had There's my mouse. Robert says it's an excellent course and well worth it. All right, it's well worth the money you're going to spend and likely earn enough in your first trades to pay for the course. Danny says, take the course. Follow what it tells you. You're not going to regret it if you're serious about being successful. I mean, just ask yourself, what was your gain over the last 12 months? Maybe not the past 12 months. What have you averaged every year? Right? If you're not quite where you want to be, right? If you haven't reached the level where you want to be, take the course. It's going to help you. All right? Because if you keep thinking the same old thing, you're going to get the same old results. So that's it's going to be costing you not to do this. And say, hey, what if it works? What if it works? All right? 100% money back guarantee. Go to VectorVest.com/TSIC. We are going to make sure you are on the right path. All right? In just a moment, we're going to open it up for Q&A. One of the common questions we see is, hey, I don't have a lot of time. Or, can I really do this myself? That's where Carol was. Carol's father had just passed away, and she was managing his estate, trying to get all that taken care of. She had a financial advisor. She didn't know if she could do it herself. So she had all this going on, and she was fearful of doing things wrong and losing money. But she took the dive. She said, all right, I'm going to do it. Now she's no longer afraid. At the time that she wrote this to me, she had 60% winning trades. She was doing 8 times better than her money manager. She got confidence, and she's having fun. You can see the big smile on her face. All right. So if you order before the end of the webinar, it's $245. It's the best investment you're going to make if you want to become a successful investor. VectorVest.com/TSIC. I'm going to stick around for some Q&A, but do me a favor. I mean, we had a bunch of you here on today's webinar. If this is right for you, if you're joining us, in the chat box, type in 2 words, I'm in. Myself, Todd, and John, we're all here on the webinar. We'd love to welcome you into the course. Like Jason, you're the first one in. You're the first one saying I'm in. Jason, welcome. Xiaoling, welcome. Sanjay, welcome. Just type I'm in into the chat box. Manashare, welcome. In the chat box, let us know. Eli, great to have you. As soon as you join, you should be getting an email from VectorVest on how to access the course material. Grace, watching over on YouTube, Grace says, I'll take it. So welcome those of you who are joining. John just typed it in. Check your email. Some of you might be wondering, all right, well, when are the live sessions? The live sessions start July 14th. So actually, that's about 1 month from today, right? You have 1 month, we will start the live session. So you have a month to go through all the modules. Take your time. Go through them twice if you want to. Write down your questions. That way, when you come to our live mastery sessions, you are ready to ask questions. You are ready for us to help you even more. It'll even sink in more when we help you out starting in July. All right. And if you can't make any of those sessions, don't worry. It'll be recorded. You can even submit questions in advance. You can call our team. They can forward some questions over to us so we can answer them live. We're also going to invite you to our coaching group, which meets on Thursdays. All right. So basically, you'll have access to not just 1 live session, but 2 live sessions every week. All right. So again, go to VectorVest.com/TSIC. John typed it into the chat box for you. Just click the link into the chat box, or you could type it into your web browser. All right. Alp says, I'm in. Says, you guys are the best. Thank you very much, Alp. David says, I'm in. Purchased, complete, already. Chris, yes, you get 1 year of access to the course. You get access to VectorVest as well. 60 days of access to VectorVest if you don't already have it. Martin says, I'm in. If you have not, Zhao Ling says, I haven't received the email just yet. Couple things. Number 1, make sure that check your junk or your spam folder. It's notorious for going there. The other thing is, if you don't receive it, let's say tonight, I'd say give our team a call tomorrow when the phone lines typically die down, and we might find that we have the wrong email address on file for you, and we can send it off to you manually. All right. All right, so I'm going to stick around, answer whatever questions you got. I'm going to put a little flag on my screen to let me know when questions have come in. If you typed in a question earlier and you need an answer to it, go ahead and copy and paste it back into the chat box. That way I could see it, because by now it is flown off my screen. So the other thing you could do is in the chat box, let me know how was, oh, Ross, you beat me to it. How was today's session? Give us some feedback on the session, whether you learned a lot, whether you hated it. Hopefully you didn't hate it. Hopefully it was well worth your time. In the chat box, let us know that too. Because Ross just typed in, he says, this was really valuable. I use VectorVest, but I'm obviously not using it as intended. Thank you for this session. Awesome, Ross. Thank you for being here, and thanks for using VectorVest. All right, so I'm going to go to the questions that come in. One is, what if I miss a live session? Don't worry. Like I said, they're not mandatory. They're like an extra bonus. That's why they're a bonus. They're not mandatory. If you miss one, don't worry. It's going to be recorded. You can even, when you access the course, you can even go in there and you can listen to the mastery sessions from the last time we taught the course, and you can kind of get a feel for what they're like by listening to some of the recordings of those as well. You can call our office anytime during the course. I'll put our phone number on here too. This is for the North America number. If you're outside of North America, you go to our website. We have toll-free numbers all over the place. 888-658-7638. There you go. You can call our team. And if most of the time they'll be able to answer your question. If you need them to forward your question over to me and Todd to be answered during the mastery session, just ask them and they can forward it over and we could help you out during the mastery session. All right, but all those things get recorded. Jason says, which version of VectorVest does this come with? It comes, if you don't have VectorVest right now, it'll come with the intraday version of VectorVest, which is a 15-minute delayed data. All right, so if you have end of day right now, for 60 days, you'll be bumped up to intraday. All right. Mike said, is there a minimum portfolio size that would be needed? And Todd typed a response to you in the chat, which I'm just going to read because I think he's spot on there. He says, I believe the education itself is worth the expense, regardless of portfolio size. Right? This is the education that we would teach anybody who's just getting into investing, regardless of their portfolio size. And then Todd went on to say, whatever the broker minimum would be your only limitation. So some brokers have waived their minimum. You can just create an account, but whatever you want to put in your account, you could start out with $3,000-$5,000. You might be investing in just a handful of stocks and a smaller number of shares, but the things that you're learning are still valid regardless of portfolio size. So I paraphrased what Todd wrote to you in the chat. All right. The 2 months of VectorVest, I believe, get turned on when you place your order, John. Xiaoling, yes, this does include VectorVest 7. Sanjay says, this was very good. I learned a lot to use VectorVest subscription. Awesome. David, no, we focus on stocks. We don't get into options in this course. We want to help you learn how to buy and sell stocks the right way. But David, what you're going to learn in this course is a solid foundation that all successful option traders should know as well. Because if you're going to be a successful option trader, you should be, number one, disciplined. You should be able to follow rules. This course will teach you to become a rule follower. But a good option trader also, if you're going to be doing bullish option trades, a lot of times you're going to use the same techniques that we're showing you here in this course to find good stocks. So Sandy, same answer to you as well. Jason, you get 60 days of RoboTrader. Eric says, I just enrolled. I'm super excited. If I did not call out your name and you're in, type your name into the chat and say, I'm in. Actually, you don't have to type your name. I could see your name. You could just say, I'm in. If you want to type your name, you could type your name too. Salvador, You get 1 year of access to the course, so you have plenty of time to go through the course, and it comes with 60 days of access to VectorVest. And if you want to continue with VectorVest after that, just give us a call. Yes, VJ, great question. VJ says, I'm already a member of VectorVest. Do I have to pay for this course? Great question. The answer is yes. This is different. Like if I pull up VectorVest, let me see if I can get VectorVest on the screen. Here's what VectorVest looks like. If you don't know, if you're not a member of VectorVest, here's what VectorVest looks like. And inside of VectorVest, we have a thing called the Quick Start course. It's called the Successful Investing Quick Start course. Right? This is, as the name implies, a quick start course to become a successful investor. What we did is we created a full course where we dove deep on all of those topics and added more. Like we added module 1 and module 6, which is not included in the quick start course. And we dove deep on all of these topics. We added more material, basically, more detail. So the great question, VJ. Jason, there is no maximum portfolio size. Sorry, I'm reading some questions. Eli says, I'm a member already and received an email welcoming me to the VectorVest trial subscription. Yeah, so you'll get an email welcoming you if you're... it'll probably send you one of those as well. Probably a little confusing. But you should also get an email telling you how to access the course. Lori, the rest of the Father's Day week, we tried to make a variety of things. It'll be similar to today, where I tried to give you at least 60 minutes of where I just was like all content that I could think of about when to buy, what to buy, and when to sell. So the rest of the week is going to be, we're going to have a session just like that on swing trading. We're going to have a session on options. We're going to have a session, I believe, on moving averages or candlesticks, one of those. So retirement is one of them. All right. Eli says, I just enrolled. Elizabeth says, I'm in. And Elizabeth said, Elizabeth, I'm in. Welcome, Elizabeth. Edward, give our team a call. If you did that a few weeks ago, this happened. It's like a Father's Day special right now. I'm not able to pull up your account, but if you give our team a call and ask them about that, there might be something that they'd be able to do for you. And just ask. Just say, hey, this is my situation. And our support team's usually pretty cool about that. They might have to say, hey, let me go check with my manager. Elizabeth says, do you cover how to use your IRA to invest? We're going to teach you, Elizabeth, we're going to teach you how to buy and sell stocks the right way, which you could do in your IRA. All right, so we're not going to specifically say, all right, here are some strategies for your IRA, but a lot of the things that we teach about buying and selling stocks, especially since this is not day trading, people feel extremely comfortable doing this in their IRA. David says, what's the difference between this course and the Successful Investor Coaching Group? Well, David, the coaching group is where every Thursday, Todd and I get together and we help people implement what is taught in the Successful Investor material, whether it be the Quick Start course or the full course. And if you remember over here, I tried to draw it out. So the coaching group meets on Thursdays, and that's where Todd and I meet with members who've paid for the coaching, and it's all implementation. People will come in and say, so we in the coaching group, we do a market timing discussion. We talk about what phase of the market we're in and what the market's doing right now. We'll talk about what our paper portfolio is doing, like what stocks we bought and sold over the course of that week. And then we open it up and we say, all right, where do you need help? And some people will say, hey, I bought this stock on this day. I set my stop here. What are your thoughts? And we go through those scenarios every Thursday. If you need more detail, just let me know. Chris, yes, we'll send you a link to the recording. I believe what we've done is we created one page where all of the Father's Day webinars will be located. All the replays will be there. Chris, we don't have a payment plan for the $245. Our system doesn't do that. It would just be all $245 all at once. Elizabeth says, awesome, thanks. I'm just looking over also at our YouTube chat. Hey, Roger. Roger's over watching on YouTube. Roger's one of our clients, getting tremendous results. And Roger's actually answering questions over in YouTube for us. Thanks for doing that, Roger. David, I don't believe your question is over on YouTube. You're saying, will we have a bundle thing for multiple courses? I don't believe so. I haven't heard of that. But we do have discounts on multiple courses. Roger, I just saw your other comment. I did get the email. I'm trying to go. You sent me. Roger's getting great results, by the way, everybody. And I asked him to send me some of the details of his trades because he was done super well. And Roger, yes, I did get it. I needed to set aside some time to take a look at it in more detail and take a look at the trades you've done. So yes, thank you for sending it. You were super fast at sending that over. I really appreciate it. And I'm going to be taking a look at it this week. I'm actually going to be out of the office next week. So I'm going to try and get it done this week. Chris says, got to run. Thanks for the webinar. All right, so what we're going to do, I'm going to give you a last chance, folks. So if you have a question that I did not answer, type it in now. All right, I'm going to get a drink. I got my drink. Great question, John says, is there special elite pricing? Actually, the standard elite price of this course, since the regular price is $495, I'm not very good at drawing, I guess. Elite price is half off, so that's $247.50. So as an elite member of VectorVest, that's what you would pay throughout the year. This is a couple of bucks below that. If you wanted to buy it now, you'd save a couple of bucks. It's our special Father's Day edition of discounts. All right. Jerome says thank you. I say you're welcome. My pleasure. Sorry. It's a lot. You ever go to Chick-fil-A? Isn't it cool how they say my pleasure instead of just saying you're welcome? You say thanks, and people say you're welcome. It's nice to say you're welcome. They're like, hey, it's my pleasure. Eric, we'll see you there too. All right, everybody. We look forward to seeing you in class. If you haven't yet decided, go to vectorvest.com/TSIC. Get yourself registered. Todd and I and John, our entire team, will love to see you in the class. Remember, the first live session will be July 14th, so you have plenty of time to go through the material. We look forward to having you in class, and have a great rest of your week. Our special Father's Day edition of VectorVest training. I hope you enjoy the rest of the training.